Hi, my name is Jive, and welcome to Kumo Dreams. This is a show about PNG SMEs for PNG SMEs. This episode is about the World Bank's Risk Share Facility. The Risk Share Facility is an innovative, great idea that will benefit many SMEs in PNG. I had an interview with Laura Bailey, World Bank Country Manager, and Carolyn Blacklock, IFC Country Representative, where they explained the facility further. Enjoy the interview. Ladies, I just want to ask you about the Risk Share Facility. What is it and why was it launched?
That's a great question. Thanks very much. Let me first just say that the Risk Share Facility is what we think is part of the answer to the question, the problem of why are small and medium enterprises in Papua New Guinea not thriving? Why are there not as many of them as we believe there could be? Why are they not generating income and livelihoods for as many families as we think they could? And why are they not creating the jobs that we think they could? What we know from experience across the world in all different kinds of countries and economies is that it's the small and medium enterprises that are the engine of growth. And when we look at Papua New Guinea, we see a country that at an aggregate level is doing well economically and growing fast. But we don't see the kind of active, vibrant small and medium enterprise sector. So we asked ourselves, as a partner who cares about improving not just the big numbers, but the jobs in Papua New Guinea, what's going on here? And the answer seemed to be that part of the challenge for small and medium enterprises is they don't have access to capital. So the two parts of the World Bank group, the World Bank, who works primarily with government to improve development opportunities for people, and the International Finance Corporation, which works with the private sector, we said, hey, this is something that actually could use both of our talents. So that's where the idea for the Risk Share Facility came from. And I'll ask Carolyn to talk a bit about what is it and why is it a good thing for Papua New Guinea.
Sure, so the Risk Share Facility is essentially a guarantee type facility. So instead of individual borrowers having to find a guarantor for every loan that they want to take out with Bank South Pacific, in this instance at a portfolio level, so we aggregate all of those loans in the portfolio, and IFC and the World Bank and the government of Papua New Guinea provide the guarantee, if you like. That's the simplest way to look at it. And that guarantee facility is called a Risk Share Facility. It sounds a bit fancier than a guarantee, but for all intents and purposes it does the same. And what it does is it alleviates the risk, part of the risk, not all of the risk, on the Bank of South Pacific, BSP. And in doing so, that for instance, if you could imagine somebody takes out a 100,000 kina loan facility for their business, if that loan happens to not be repaid, then 50,000 kina, let's say the whole amount was written off, the 100,000 kina, 50,000 kina would come from this Risk Share Facility. So in fact, it helps Bank South Pacific not to take on risk that's going to hurt their long-term prosperity, but to maybe take on different types of customers that in the past they may have seen as being too risky. So that might include a new sector or business, such in this case an SME, or small and medium enterprises, where in the past they might have thought of them as just a little bit too risky, but with this additional comfort, this guarantee or risk share facility, they're now attractive customers. So it helps banks like Bank South Pacific go the next mile. It's not going to be the be end and end all or the panacea to solving the problems of SMEs, but we really do have great hope that it will at least increase their access to credit.
There are lots of actions that government and the private sector can take to improve the prospects of a small and medium-sized business. The Risk Share Facility, as Carolyn's described, is seeking to address a particular problem, access to finance. But even more specifically, it's trying to address the fact that we observe banks are a bit scared, a bit risk-averse about lending into a group of businesses, a sector, that they don't really have a lot of familiarity with. So that's what the Risk Share Facility is designed to do. But I would like to mention that along with the Risk Share Facility, which is a big pot of money that helps alleviate risk, there are some smaller pots of money that are meant to directly help the three key groups involved: the small and medium-sized businesses themselves, the government, whose responsibility it is to help promote small businesses and encourage and create an enabling environment for them, and the banks, whose job it is to be good, savvy lenders and know how to lend well and effectively to the small and medium-sized businesses. So there are little pots of money that are specifically designed to help finance training, specific outreach programs, and other activities that will help each of these groups. So there's a little slice of the project called a component for the small and medium enterprises that'll focus on outreach to entrepreneurs, including specific outreach to women business owners who we think might be a little bit intimidated about participating in formal loan processes. There's a pot of money that will go to government to improve its ability, the Department of Commerce and Industry in specific, their ability to be helpful and promote small businesses. And that's actually funding something that you might have seen in the newspaper recently, which is there will be a baseline survey on small and medium enterprises that will give us a sense of what's really going on in the country, because we just don't have a good enough sense. And then the third component is some support and training for the banks. And Carolyn mentioned Bank South Pacific, who stepped up first and is the first participant in the risk share facility. But it is open to other commercial banks, and we hope they will also choose to join when they see the success that we hope this project will bring. But the banks themselves need a little help. The loan officers, the management teams in the bank need to understand a bit more about what is this sector that we call the SME sector, and how can we lend into it and do a good job. So you have a big pot of money, that's the risk share facility, that's meant to help alleviate risk and share it. And then these three much smaller pots of money targeting to the different players. Our hope is, certainly this is not a silver bullet, it's not the perfect project to fix all of the issues. If you speak to small business people, men and women who operate SMEs, they'll tell you, yes, access to finance is a problem, but I've also got problem with security, I've got problem with transport. There are lots of problems, but this particular effort is focusing on that one very specific problem, getting access to money, to finance, to credit, to grow your business. And we're very excited that the project has started, and the activities in each of the different areas are beginning to tick over and move ahead. And we hope that at this time next year we'll be able to actually talk to you about what kinds of businesses have taken advantage of this program and what it's done for them.